Great. Thank you guys. Okay, so wow, what a day, huh? So this morning we talked about a couple of things, but what I had stressed, or what I had tried to stress at least, was that I thought that there would be strong buyers below. Again, I'll have the pre-market, the market preview posted here shortly. It's been a busy day, but the first thing that we needed to note, right, on any given day of a drive, right? This is the inversion of a normal day. And so the first thing that we should have identified out of the gate is that we did not have an open drive lower, right? Which was one of the things we were looking for. And Globex low held right out of the gate. And what I'm going to do is just kind of go over the executive summary. Obviously, everyone knows that we traded straight up. But what I want the focus to be, first of all, is how could you avoid getting seriously run over, right? Is that a good example of tick divergence right now? It's the end of the day. It doesn't matter. So many algos fire in the last 2 minutes that, yes, often it is, but it's dangerous. And I do not fade or buy the last 10 minutes. That's to ASDG. He had asked if that was a good example of tick divergence. So we can go back and look here real quick. But on a day like today, where where it's just so incredibly strong, right? You had, let's see, right here is where you had tick divergence all the way through on the 5 minute, and I'm certain it was on the 1 minute as well. We pushed to at least on a closing basis. Here was our high tick right here, and then on that next push up, right, that's where we started to have the tick divergence right behind this zone. So it was an incredibly strong day. Looking for places to fade, especially after it's so clear that buyers are in control. Not a great idea. So let me get back really quick to the opening concept, right? So first of all, we did not trade below Globex lows to start with. First clue, right, that we were not exceptionally weak. Next clue, gap fill. Half gap. Half gap was approximately right here, right below Wednesday's low. You can see, so I wanted to show the area. You can see that they tried to reject it here and were unable to do so successfully, okay? I had also mentioned pre-market while we're at it. This is half gap. We've clearly closed it. So again, we don't see any weakness. And this is gap fill right here, or just underneath it. And you can see that they rejected out of gap fill. But the first thing that I see is that very early on, identify an open drive up. Second thing that we identified, and that I mentioned, I try to be as explicit as I possibly could. If we opened at tick extreme this morning, which we opened at past negative 1,000, okay, at least on my charts, that I would be very cautious. Last thing I said is I would be very cautious, right, of shorting or fading. The other thing I said was that this zone right here, that I was really leery of this zone. Even though I took a trade in this zone, I was concerned. It looked weak when I was making it. It didn't make much sense to skip it. Of course, in retrospect, it would have, right? And I said if I took it, I needed a good stretch. Well, from 1803, right, back to 1808.50, which is approximately where I took it, it looked like we would stall, and you can see it was a valid zone. We paused there. That's what I want out of the zone, is a pause at least to give me time for a rotation. That's all I can ask for. But you have to take that within context as a trader. I only had 2 guys come back to me and go, hey, that's a tick extreme you were talking about, right? And I go, yeah. And they traded. I didn't obviously take it, but they did turn around and take that trade long, right? And they took absolutely no heat on that trade all day long. I had one client, Daniel, I want to congratulate him. He had a 20-point day on ES, which is just fantastic. I was very happy to hear that for him. I did not. I was down on the day. I finished down roughly just under 6 points on ES. And I was down on NQ for that matter as well. I picked up, I was down 6, and I scavenged a couple more points on scalps. But for the most part, it was probably down 4 when everything's added together there. So 4 points on ES, that's equivalent. That's $80. It's just under 2 points. So let's just call it just under 8 points down for me for the day. I'm down approximately 12 points for the week, which isn't bad, but you got to consider my maximum stop for the day is approximately 11 ES points, depending on the equity in my account. Right now, it's 11 ES points. So I'm essentially down one day, and I've certainly had better than plus 11 point days. My entire goal going to that point, the only reason I say that is not to brag. My point is I never want to dig a hole larger than what I can make back up in a single day. Yes, in ASDG, that was an example of tick divergence. There's no question there. So this was our first clue right here. When you see this, about 70% of the time, you will see a counter rotation up. The next clue of this, that this was working is that as the tick was rising, so was the S&P 500. And I had described what it looks like when we have a trend day down. And what happens is we have a market open down. First of all, it clears down like this. I also said the first 5-minute bar will fail to get closed above. So you have to recognize immediately, as soon as we trade above that first 5-minute bar, trend day down is off the menu. Second thing, as the tick was rising, ES was rising with it. On a trend day down, what ES will do is come down like this, and as that tick rises, it will do something like this, but will not clear the first 5-minute bar and then makes a continuation lower. So in this particular case, I had several clients tell me, hey, the market, there just seems so many rules with the zones. I have to skip one zone, I have to do another zone. And that's true. It's not a mechanical trading system, okay? You have to be able to fluctuate with the market. This is exactly what kills individual traders, right? You can't have just one system fits all because the market's too variable. I don't know anyone that called. No, I did say it was possible to trade all the way back up into Wednesday's high. And if you look on the video, what I said what the requirements were. First of all, the first potential trap was that we traded below Globex low and then trapped back above. That could certainly push us to the white zone. The next potential trap, right, was to trade above Wednesday's low, and you can see they traded above it and they tried to push it down, unable to do so, right? And then I said, if they got this scenario, this exact scenario I laid out, if they got above Wednesday's low and held, that we would drive to the other end of the range. So it's not so much that you have to change your trade. I still faded. I still expected a rotation at each zone, right? Maybe I was pushing a little too hard. I certainly didn't expect the strength that we had in the morning where it would be straight up. But essentially, that's exactly what we did, and we were able to push eventually above Wednesday's highs, and then obviously not much more above Wednesday's highs. We kind of trapped there. So how do I want to describe this? There's only so many ways you can handle this in your trade plan. The way I handle it is, if I see we're in a trend day up and I take a trade, first of all, I want as minimal risk as I can, so I'm going to shoot for the back of the zones. Secondly, if I get anywhere close to my 8 ticks, i.e. it goes 6 ticks on the ask, I'm moving my stop to break even so I don't get smoked, right? The last piece of this, on this zone here, even though I took the stop, right? Look at this, 5, 10, 15, 20, 25 minutes. Most of my coaching clients were able to close right here, and I got to tell you, I was distracted and I missed this 25 minutes in the zone, which is a little bit frustrating because I ended up taking the loss, and I could have obviously covered this pretty much flat. So that was a trading error on my part, and I will mark it down. In this zone, the white zone, I expected rejection here. We got it on the really on the first touch, but we didn't get enough rotation down, and I stuck it a little bit too long, and obviously it rotated up and went ahead and stopped me out on that trade. I took it at the front of the zone, and it just gave me no rotation there. That's a market risk I cannot eliminate. So here's the dilemma for traders as a whole, which is what I want to transfer this to, is how do I take the early morning trade plan and how do I transfer this to a day-by-day flexibility so that I can make money? Well, you have a couple of choices. If you can identify this, as two of my clients did, as a tick extreme, and this is the key, and you're willing to take the loss on the trade with a reasonable stop, there's nothing wrong with taking a long there. It's not in my trade plan, right? It's not even in the trade plan I don't publish. It's just not my trade plan. The reason for that is, over my career, and I'm talking over 2 decades, right? Buying the open out of the gate is a losing proposition for me, okay, over time. And I am not good enough, okay? I've tried to fit rules around this so I don't get smoked, but I've seen it go the other way as well. I'm not good enough to make this call, in my opinion, okay? Even though I consider myself a very good trader. It's not my trade. The second part of that is this. I am a counter rotation trader, and I'm stuck, at least short term, in a market that keeps having trend days. And we've had an enormous amount of trend days lately. So what do I do, and how do I handle that? Well, first of all, you've got to decide on trend days. Are you going to trade them or not as soon as you identify them? I had identified prior to 9 a.m. that these all had the characteristics of trend day up. So as soon as you see trend day up, you should have a written trade plan for how you're going to handle that. Mine is quite simple, and my fail safe so that I don't get crushed on any particular day is if I take 2 stops back to back. That rarely happens. I stop trading for the day. Why did I put that in? Well, should ever I get caught in a market that's crashing, or in this case, right, liquidating up. In this case, we kind of had a melt up. I don't destroy my account in one day. I take 2 trades. Days done in that, in that particular security, and sometimes for the day as a whole, and I let it go, right? There's been a million trades. No one day counts. No one market counts. That's the first thing I got to decide. If you're going to trade it, right, you've got to accept that the zones might get blown through on a trend day up. And I mentioned in yesterday's, I mentioned this morning as well. Trend day down have had better rotations back up than trend days up, and that goes in line with we're in a raging bull market. Hard to believe how hard we've bounced from the lows, but as I said yesterday, there's now a Yellen put on the market, and people are very bullish. And I was concerned about this scenario. And even had we not gotten this scenario and we had broken lower, I certainly expected us to move back and trade higher in the afternoon. I did not think this gap down would hold. Let me see who else. I don't know what BTFD means. You had to clarify what he asked, how is it not profitable in the long run? Well, no, that's perfectly fine. If you find a trend day up and you want to buy the pullbacks, that's great. I didn't, all day long, there wasn't a single pullback that would have met my qualifications. If you can identify that, it's totally profitable. Where was your trade location here? So you got to understand what I'm trying to do, guys, and this is to everyone. What I'm trying to do is get a model to present to the guys I'm coaching, to people who've struggled to get profitable and stay profitable, whether they're boom bust traders or consistently losing, right? The first key to that, control your losses. The second key to that is to give you some way to measure what's going on in the market. If you want to become a specialist in trend days and that works for you, that's great. I have no problem with that. But just realize over a 2-decade span of time, going all the way back to 1990, including all of the wild market runs that we had in 99 and early 2000, okay, trend days up comprised a total of 14% of all trading days. The majority of those were trend days up. Some of those were trend days down, less than 5% of that, okay? So yes, if you want to work on mastering trend days, I have no issue with that. For me, I'm a counter trader, and I'm not going to start to chase. And the issue that most individual traders have is they actually don't have the mental flexibility to flip back and forth easily. If you do, you're the exception, but there's a reason why 70% of retail trading accounts blow up, okay? For me personally, I have my own challenges. I'm ADD, and I don't, what has worked best for me in building wealth and building a large trading account has been staying consistent day in, day out. And that's what I tried to share with the guys that I'm coaching, right? It's not that I claim to be the best trader in the world. It's not that I claim that the zones are anything magical. They are simply support and resistance areas that can get busted, right? But my rules keep you relatively safe. But even then, right, I have a difficult time staying on top of it. This right here would have kept me from having one of my stops today. I would have been able to get out of this trade break even. I lost track of the 25-minute rule. Up here, if you'd shorted here, 5, 10, 15, 20, 25 minutes, kept you out of getting busted. This zone right here, first rotation of this zone, almost gave you a 2-point rotation down, and I called out, move your trades to break even. But let me tell you, I've been in this business a long time. I ran a hedge fund for the better part of 10 years. I know a lot of traders across the street. most traders that I know that are big traders, meaning they're trading large size, do not trade these trend days up, or at least have a difficult time catching these trend days up. Why? The majority of the time, ES is an arbitrage product and it trades like this. Go look at your charts, they'll all confirm that for you. They move up, you get a counter rotation, you get a rotation down, they move up, and they tend to close somewhere in the middle, from the bottom third to the top of the third. That's where the majority of the days are. Now, are we in an exceptional period of time? Perhaps, right? But I don't have any idea of how long this is going to last. And then the flip side of that is, right, if you're going to claim, well, I should have bought this gap down and made all this money. Well, let me tell you, everyone who claims that they buy this gap down and they were killing it, the question becomes very simply, and we can go back here and look just a couple of weeks ago, right? So I'm going to compress this for a second. And then I'm going to finish up because I got a coaching client here at the bottom of the hour. But if you look back here, let's just pull this down. There we go. I'm always truly confounded. Not working the way I wanted to. There we go. I'm always truly confounded by these same guys that say, well, I got the bottom or I ran it up, although today was certainly acceptable, right? Extreme tick lower. But what were all these guys when they were thinking, well, I bought the open quickly and I ran up. This day right here was one of my biggest days of the month, all of this, and this was all on a downtrend. Every one of the zones that were there, obviously these are no longer the zones, had provided rotation. Each one of these afternoons, for the most part, provided great rotations back up, right? As you know, I usually don't trade the afternoon session. And if you look each and every day, right, I just simply do not believe. I've been around trading for a long, long time. I've spoke to too many guys that have blown up. I was a partner in an introducing brokerage firm for futures and Forex, right? And I can tell you on days like today, we were simply, by the last hour, we were simply tabulating if we could call all the people who had margin calls at the end of the day, or how many accounts we were having to liquidate at the end of the day. And let me see, Brandon's asking a question here. Open Drive help provide context. Well, 96% probability we break either Globex high or low. Okay, fine. There were really only two trades you should have taken. Short 1811 with a 3-point stop, and then long when we found acceptance in the previous day. Well, Brandon, if that's your trade plan, knock it out. I don't have any issue with that. Like I said, I was quite clear on what my trades were, and I'll go through it again one more time. I'm not trying, I want to be clear, I'm not trying to be super trader. I do not claim that my methodology is the best. I am not a volume profile trader. I want to be clear on that for everyone who's wondering. I simply am not and will not ever be a volume profile trader. I am a counter rotation trader. I expected every point of resistance. Now, if you're telling me the only trade was 1811, okay, fine. I just have no problem with that. I was right in the middle of the zone, and I'm good with it. No issue whatsoever. The zone just got blown through. There's nothing you could do, right? You would have gotten stopped there. I said before market, unless you were a very aggressive trader, this was a crummy place to take a trade. Also, Brandon, where else were you calling that trade? I didn't see where else. 3-point stop and then long when we found acceptance into previous day's value. So you're saying long above the white zone. Sure, that was fine, but there was no counter rotation. And if you're telling me you could look at the market at that point, and I did say if we got above yesterday's lows that we would be trapped and we would move to the other end of the range. That's very true. But once again, I'm not trying to prove anything to anyone. I can just tell you the majority of the time I expect rotation at each zone. And the way that I handle that is keeping stops nice and tight. And I do not believe I know where the market's going to go at any one time. And I'm simply looking for a pause and a rotation. I do not chase momentum on almost any day of the week. And so if that's what you're looking for, you got to find someone else to follow. Okay, because I just simply do not believe my evidence suggests that trading methodology does not work in ES. Works great in NQ, does not work in ES. So you're welcome, CD. And it's not a challenge to anyone. It's not a challenge to you either, Brandon. I simply have to stick to a method, right, that fits within my own confines. I'm ADD. The fewer decisions I have to make while I'm trading, right, the better off I am. When I was trading other people's money, and I learned this the hard way, right, I would find it does me no good, right, to flip my trading style completely to capture this day when it comprises 14%. If I can get an entry, right, and there's many days where this sets up, where I get a drive down, I can get a long, and then the rotation up, I'm all for writing these things up. But when you're forcing me to buy near the high of the day, it's just never going to happen with me, because I can go back into the mid 90s and I can go back into the mid 2000s and I can just show you day after day of getting smoked. Most traders I speak to haven't even been around 3 years, and there's a reason for that. Most traders don't last 3 years in this business. I've been in this business for 20 years. I intend to stay with it for another 20 years, and it's not because of the money. It's because I like doing it. Okay, so again, if you want to trade volume profile and you want to go by the stats, that's great. I don't know if you can introduce me to any, and I'd be impressed. The only person I know who uses those stats to great effect is Futures Trader 71. And from what I can tell from his actual trading style, I don't know the man personally, but what I can tell from the gentleman's trading style, despite the fact that he calls out, it has an X percentage of breaking this high, X percentage of breaking this low, the man trades very concentrated positions at very specific points for 1 to 2 points, okay? And that's fine. I have zero issue with the man. I think that's fantastic. I think that's exactly how a professional trader trades. If you've ever been on the floor of Goldman Sachs, if you've ever been in the pits when the pits used to exist back in the 90s, most traders were looking for 1 to 2 points. They were not looking for these 20-point rips, and they were making millions of dollars a year. They traded one security, they traded one trading style, and that's all they were looking for. That's all I'm looking for. It's all I've made. That's how I've made money consistently. On days when I happen to catch this stuff, cool. As it was, part of the price for me, right, of doing these market previews is I have two choices. I can either start early and end 15 minutes early, okay, but as it is, I haven't been able to manage that, and I end right at the close. The only way I could have captured this would have been two things. First of all, I would have had to break my rule and buy without a rotation down after the market opened. Number one. Number two, the green zone was questionable and aggressive. You could have skipped it, no problem. I would have gotten stopped here anyways. There's nothing that would have prevented me from getting my 2-point stop behind the zone, even though I had pushed all the way to the back of the zone for my trade entry. Number three, this zone right here, I simply missed that we were 25 minutes in the zone. I'm really kicking myself for that at this point, but ready to let it go. And on this trade right here, it spent 25 minutes in the zone before continuing higher. It would have caused no damage. The majority of my clients, following the trade rules, right, the majority of them did not take a trade here. 2 of them, of my coaching clients, got long here and had a gangbusters day. Fantastic, and congratulations on that one, right? I had 1 or 2 guys take this once we broke above Wednesday's low with a stop right behind. They were using a 4-point stop. I did not. I wish I had, but I didn't. And then everyone else I spoke to pretty much ended up with a 2-point with 2 points worth of loss on the day because they followed the 25-minute rule, and it simply never smoked them. And they also avoided this zone. As soon as I said this zone was high risk and I thought that it could be broken rather easily. That's all I want to do on a day like today is survive. That's easy enough for me. And then I got run over in NQ. That's part of the risk of the trade I take. But on the flip side, I've had plenty of days where I've made 20, even 30 points on NQ. So you've got to balance it to your trade plan. The last thing I want to say is, and this is money management over a week. On Tuesday, I broke my trading rules. Or I didn't break my trading rules, but I tried to enforce a concept that I had in my mind. And several things led into that. I went into it in great detail on Tuesdays, after Tuesday's close. But long story short, Tuesday I should have either walked out down 2 or plus 2, depending on how you looked at that day. This is specifically regarding the ES, meaning had I followed my structure, but I was off plan, I got back on plan the following day. So when I look at my week as a whole to decide, is this a disaster or am I still on track to make lots of money this year, right? So if I had followed my trading plan, my minus 6-point day on Tuesday turns into, let's just say it's minus 2. On Monday, I was down 2. There was no question. That was it. On Wednesday, which was yesterday, I had an entry sitting there at 18.12. It went to 18.12 to the tick, and it simply didn't fill me. But had I gotten that trade, I would have gotten at least 2 points. So at that point, okay, so let's just take out bad luck. You can't count that. I was in the right place at the right time. Totally happy with that. Traded poorly on Monday. I followed my rule, -2. No problem with that. Had I followed my rules, I'll assume I would have been -2. And then today, right, I was minus roughly 6. That puts me down a total of roughly 10 points had I done this correctly, versus where I am, which is closer to 13 or probably 14 points. Again, the math thing, I got to go and actually do it by hand with my ADD. So that's a dynamic difference. I've had plenty of 10-point up days. I can recover that in one day. I'm still within shot. Even if I didn't do it in one day, I'm within 2 days of hitting my highs again, right? Versus there's plenty of traders that lost 10, 15 points today. So my pleasure. So at any rate, the point is sticking to your trade plan day after day will keep you from flipping and trying to chase the latest price action. And will also, if your stop rules are correct and you have a true edge, should give you at least the opportunity to survive days like today. And then the last piece is, guys, I'll tell you right now, you see a big negative tick open right there, and it's in your trade plan. It's not in mine, but if it's in your trade plan, take it and run with it. These days happen a lot. This comes up probably 60 to 70% of the time, and it's worth taking a 4-point loss on it because they often yield 10 to 20 points as they did today. So if anyone has any questions, that's really the most insight I can give to that. But if you had a bad day, journal about it. If you're beating yourself up, go and look if you followed your rules each day of the week. No trade plan is going to be profitable all the time, but every trade plan should let you survive a negative period of time and then go on to be able to take the following day and trade again. And you should be able to recoup your losses within a few days if you're a day trader, right? Never dig a month's worth of holes or a week's worth of holes when you only need 1 or 2 days to get back out. Any last questions? Can I elaborate on the trade plan? Simple. When we open an extreme negative tick, this is great homework for anyone who wants to do it. You can go back and do a historical study anytime, particularly in bull markets, but in almost every market I can think of. This is the NYSE tick. It simply shows the number of stocks going down per tick. The negative ticks for, let me try the ratio right. It's every stock on the New York Stock Exchange going down for every one going up, if I have the ratio correct. Negative 1,000 is an extreme. This is only rely on ES. I do not use the tick for NQ. So obviously the S&P 500 only comprises a fraction of what's on the New York Stock Exchange. But when you get the New York Stock Exchange opening at such an extreme tick, you usually get a pretty violent reaction the other way. It's an overreaction of shorts. Simply, often same thing on the other side. When you get an extreme open to the upside, you'll often get a roll down. Again, that's more applicable in bear markets than it is bull markets. But in this case, anytime, go back and look, anytime the market's open more than negative 1,000, the market reacts violently to the upside. I covered that in the market preview. If you look in the last couple of minutes, it's exactly the scenario I laid out. And the last piece is, and I know what I wanted to say, if you want to trade these days and capture these rotations in here and you say, well, I just don't want to trade these days, I lose money. You can't turn around on days like this where we start off with a gap up and it appears that we're starting with a trend day and then turn around and go, well, I want to capture these days, right? Or I want to capture these days where we are getting decent rotations to the downside at the zones. There were zones here and they gave good, decent rotations, right? And then you cannot pick and choose because it's impossible to read. Either decide that you're a counter trader, especially if you're trading with me, or go find someone who's an ES momentum trader. But I promise you, odds are they don't make a lot of money. Okay, now there are guys that trade this 24 hours a day and got set up. I don't trade outside of regular trading hours on ES, or very rarely at least. And I just simply didn't see anyone, actually one options trader is the only one I saw, outside of laying up this scenario where if we got it back above Wednesday's low, we could push up to the other end of the range. And we did. It's exactly what I laid out. And if you want to wait for that scenario to set up and then you can find a counter rotation, right? I would have happily taken this. If we had rotated from here back down to the back of the white zone, I would have gladly taken that long to the upside. No objection. Same thing here. If we could have traded down, back into Globex highs, I'd have gladly taken the long back to the upside. I just didn't get the rotation. So I'm not against trading with the overall trend. Just didn't give me an entry. No big deal. So anyways, guys, I hope that helped. I've got a client waiting. I'm going to jump and coach him through the session. If you have any questions, you're welcome to email me. I hope everyone did okay today. I hope, actually, I wish everyone made 20 points across the board. I didn't. And the reason I'm public with my losses and my gains is because I want to show how over time, day over day, week over week, right, you can make a tremendous amount of money with having a set trading plan, right? And you need a little bit of flexibility to that trading plan. And if you're having trouble with the flexibility part, it could have nothing to do with your trading plan. It could simply have to do with your mentality. And I want to reiterate this. Your trading plan is probably, once you have it down, it's probably only 30% of the problem. 70% should be working on yourself. If you're going home and staring at this chart, trying to figure out how this happened, you're looking at the wrong part. The part you need to be looking at is you and what pressures are on you to make good trading decisions, and what is your decision tree, and how are you making those decisions so that you can be successful in the future. The plan is not the problem unless it just doesn't have an appropriate stop or a true edge. Anyways, as when you say the top of the range, how do we know where the top of the range is? Well, yesterday's top of the range was yesterday's high. That was the range, right? We bust back into the prior day's low. The other end of that range is all the way up at the high. So anyways, I'd love to answer more questions. Y'all are welcome to email me, tradeandperform@gmail.com. The email's on the blog, or you can hit me on Skype or Twitter. I've got to jump. Y'all have a great night, guys, and thank y'all for joining.